The Indian stock market was closed on February 26, 2025, in observance of Maha Shivratri. This religious holiday provided a moment of respite for investors after a volatile week in the global markets. Trading will resume on February 27th, and all eyes will be on how the Indian indices react to both international and domestic cues. With a host of factors at play, investors are bracing for a potentially volatile reopening. Prior to the market holiday, the Indian stock market experienced a turbulent session. Indian equities closed lower on February 24th, reflecting a broader global trend of risk aversion. This mirrored a global risk-off sentiment, as investors worldwide reacted to various economic uncertainties and geopolitical tensions. The benchmark indices, Sensex and Nifty, witnessed a significant decline, marking one of the steepest drops in recent weeks. The Sensex fell by 1.14%, shedding 856.65 points to close at 74,454.41. This decline was driven by heavy selling in blue-chip stocks. The Nifty mirrored this downward trend, dropping 1.06% or 242.55 points to end the day at 22,553.35. The decline in Nifty was largely attributed to weak performances in key sectors. This decline was broad-based, with the IT and pharma sectors emerging as the major laggards. Both sectors faced significant selling pressure due to disappointing quarterly results and global market trends. In contrast, the auto and FMCG sectors demonstrated resilience, closing the day with relatively moderate losses. These sectors managed to hold up better due to positive domestic demand and favorable government policies. Overall, the market's performance on February 24th highlighted the ongoing volatility and the cautious sentiment among investors. As we move forward, market participants will be closely watching for any signs of stability or further turbulence. Global markets have been grappling with a surge in volatility, driven by a mix of geopolitical tensions, economic uncertainties, and fluctuating commodity prices. Investors worldwide are on edge, trying to navigate these choppy waters with caution. These anxieties are expected to cast a shadow on the Indian market when it reopens. Analysts predict that the ripple effects of global market instability will be felt strongly in India, potentially leading to a cautious trading environment. The recent tumble in US markets, particularly the correction in the tech-heavy Nasdaq, is a key concern for Indian investors. The tech sector, which has been a significant driver of market growth, is now facing headwinds, causing investors to reassess their strategies. The performance of Nvidia, a bellwether for the tech sector, will be closely watched as its Q4 results are expected to significantly impact Wall Street sentiment. Nvidia's earnings will not only reflect the health of the tech industry, but also influence investor confidence across other sectors. Additionally, Warren Buffett's Berkshire Hathaway's record $134 billion net stock sale in 2024 has raised eyebrows and fueled concerns about broader market performance in 2025. This unprecedented move by the Oracle of Omaha has led many to speculate about potential market corrections and the underlying reasons for such a massive sell-off. Historically, such large-scale sell-offs by Berkshire have been followed by periods of subdued market returns, adding to the current unease. Investors are now closely monitoring market signals and expert analyses to gauge the potential impact on their portfolios and make informed decisions in these uncertain times. While global uncertainties loom large, the world is witnessing a period of significant economic flux. From the fluctuating stock markets in the West to the unpredictable trade policies in the East, every region is grappling with its own set of challenges and opportunities. The Indian market is also navigating a complex web of domestic factors. The country's economic landscape is being shaped by a myriad of elements, including policy changes, market reforms, and evolving consumer behaviors. The highly anticipated launch of Tesla in India is expected to create ripples in the domestic electric vehicle sector. This move is not just about introducing a new brand, it signifies a shift towards sustainable and innovative transportation solutions. Established players like Mahindra and Mahindra will be keenly watched as they gear up to compete with the global EV giant. The competition is expected to drive innovation, improve product offerings, and ultimately benefit the consumers. Meanwhile, ongoing merger talks between telecom major Airtel and Tata Group could significantly reshape the Indian telecom and media landscape. This potential merger is seen as a strategic move to consolidate resources, enhance service offerings, and expand market reach. The potential synergies and market consolidation arising from this deal have kept investors on the edge of their seats. Adding to the excitement, the merger could lead to more competitive pricing, better network coverage, and improved customer service. Vedanta's strategic demerger into 5 distinct entities is being viewed as a potential goldmine for investors. This move aims to streamline operations, focus on core competencies, and unlock shareholder value. This move is expected to unlock value and create more focused and agile businesses, presenting attractive investment opportunities across various sectors. Investors are optimistic about the potential for growth and profitability in these newly formed entities, making it an exciting time for the Indian market. Section 5. Sectoral Spotlight. Where to look for potential growth. Amidst the market volatility, certain sectors are expected to outperform others, presenting pockets of opportunity for discerning investors. The banking, financial services, and insurance sector remains a favorite among analysts due to its strong growth potential and resilience. Similarly, the healthcare sector is anticipated to benefit from rising healthcare expenditure and a growing focus on wellness. However, sectors like auto, real estate, and tobacco are facing headwinds and might witness muted growth in the near term. Section 6. Promising Prospects. Stock Recommendations under Rs 100. For investors seeking value buys, certain stocks priced below 100 rupees are garnering attention. Ease My Trip, a leading online travel platform, is well positioned to capitalize on the resurgence in travel demand. Z Entertainment, a media and entertainment conglomerate, is undergoing a strategic transformation that is expected to drive future growth. Jppower Ventures, a power generation company, is attracting interest due to its strong fundamentals and attractive valuations. These stocks, while not without risks, offer an attractive entry point for investors with a long-term perspective. Section 7. Navigating Volatility, Expert Opinions and Market Outlook. Market experts are advising investors to exercise caution and brace for continued volatility in the coming days. Prabhudas Lilladher, a prominent brokerage firm, has revised its Nifty 50 target to 25,689, acknowledging the heightened uncertainties. The firm also expects the Indian rupee to remain under pressure due to widening current account deficit and geopolitical tensions. Section 8. Stock-specific developments, opportunities and challenges. Several stock-specific developments are expected to influence market sentiment. PTC Industries, a manufacturer of high-precision metal components, is in focus following its recent acquisition of a UK-based aerospace company. This strategic move is anticipated to bolster PTC's global presence and enhance its earnings potential. On the other hand, Vesuvius India Limited, a supplier of refractory products and services to the steel and foundry industries, might face headwinds due to rising input costs and softening demand in some key end-user segments. Section 9. Investors' Compass. Staying informed in a dynamic market. The Indian stock market is poised at a crucial juncture, navigating a confluence of global and domestic factors. While the near-term outlook remains cautious, long-term investors can utilize periods of volatility to accumulate quality stocks at attractive valuations. It is crucial to stay informed, conduct thorough research, and adopt a disciplined investment approach to navigate the complexities of the market effectively.